Hi, and welcome back after the break. I hope we had a quick coffee break. I'm still having my ACCA coffee. Okay, good to see you, Tuba. Good to see you, Nafiu. Welcome back, Hema. Welcome back, Fatima, Petya. Pauline is joining in. Rahat in the queue. Oh, good. All the students are here. So, are you guys good to go? Yep. Can you please write me? Yep. Also, you can mute yourself, everybody. Pauline, Rahat, please mute yourself. Fatima says, yes, please. Okay, no wasting time. Straight into the topic. Task number, I believe, 10 we were into, isn't it? Ruth started trading a year ago. She sells her products at a markup. Guys, markup and margin. I have fantastic videos. I was talking about my YouTube channel. This is my YouTube channel, a very popular one, accounting lecture. Hope you have already encountered. If not, keep checking the videos. A very old video on markup and margin. Many, many topics. So check it out. Not going there now. Later on, you can check it out. Markup and margin. Yep. Markup is a profit. Margin also profit. Markup applied on cost. Markup applied on cost. And margin applied on sales. A profit margin applied on sales, a cost margin, a profit markup applied on cost. Yeah. So here it says she sells her products at a markup of 30%. That means cost plus profit equals to sales. I'd like to take a little more space here. And if it is cost plus profit equals to sales, and they said in markup, cost is 100% always. And they said 30% profit, so sales is 130%. So if it is the scenario, in the first year of trading, she bought goods this much, sales goods this much. So sales is 30,888. 30,888. What is the 30% of it? What is the cost price of it? I am basically looking for the cost price of it. 30,888, which represent 130%. You got to find out how much is the 100% of it. So try to calculate here. I'm here to help as well. 30,888, that represents 130 divided by 130 times by 100. If you do, you get a cost. Yep, 23,760. I need that figure. Again, how did I get it? Let me show you. $33,888 represents 130 divided by 130 times by 100. I get this figure, which was, I forgot, 23,760. 23,760. Acha, let it be there. Then read the question further. She bought goods worth of this, and she has her sales during the year was 30,888. But the cost price of this is this, 23,760. So the difference between 25,800 and 23,760, it must be the remaining items, which is the inventory. Can you please get that difference? Like I'm doing a minus format. How much they said it? 25,800 minus 25,800. 2040. 2040 is the value of the closing inventory. Summarizing for you again, please. Ruth started a business a year ago. She sells her product cost plus markup. Cost plus profit, which is called a markup. She bought the items for 25,800. And so from this purchase, 25,800, let's assume, I'm giving you a very quick, simple answer. 500 items I bought worth of 25,800. Out of the 500, 450 I sold items, not the price. 450. 50 left over. What is the value of that 50 left over? This is the value, guys. 237. No, 2040. 2040. I bought worth of 25,800. I sold worth of 23,760. So left is 2040. Okay? Yeah, that's how you got to do. That's how you got to do. Little deep inventory. Next question is very simple, easy peasy. Arthur. The next question is Arthur has found that invoice 780 motor expense has been posted to the correct side of the motor expense account, but entry was overstated. Expenses shown higher. And this is a single entry, one-sided entry, motor expense only. Motor expense, you have shown higher. You need to make it down. This is a suspense account question. What do you think should be the answer? Let me go through the little explanation. Getting the difference is good to get the differences first. 780, 870, it's 90 is done. I don't need to need my calculator. Olin says A with a question mark. Nafiu says A. Okay, let's go through A. At first, you need to make your motor expense down by 90. Agree, yeah? Motor expense down by 90. So motor expense is a debit account. You need to make it credit. Motor expense is an expense. Expenses are debit. You need to make it credit. So yes, this can be your answer or that can be your answer. A or D can be your answer. But this is a suspense account question because Arthur found invoice motor expense has been posted on the correct side of the motor expense. One-sided error, guys. They never told us, but you need to you need to assume this is an one-sided error, and one-sided error creates suspense. I repeat, single entry error, overstated, understated, written it twice. This creates your suspense. So yes, motor expense credit, suspense debit is the right answer. Number 12. What debit entry should be made in the goods for resale account? Let's read it. Similar like markup question, but this time it's a tax. Sales tax is not in the syllabus for AAT unless you are doing business tax process, level 3. I'm gonna mute all the students here. Ari is registered for sales tax and he has purchased goods for resale. Purchased, remember, it's a bought, it's a purchase account. The invoice shows the cost is this, which includes 10%. So do you agree this is 110%? And you need to get the 100%. And that's it, that's the answer. How much is the answer then? Who finds the answer? I'm giving you 30 seconds. $357.5 is including tax, 100 tax. I need to get rid of the 10% tax. What is the 100% of it? Fatima says 325. Stella is drawing on the screen. Stella, don't draw on the screen, please. Rahat says 325. I do agree with that. Yeah. What do you do? This divided by 110 times by 100, you're going to get your answer. 325 is the answer. Thank you, Fatima. Thank you, Rahat. Let me delete this. Okay, disable annotation for others. So you cannot write. Don't write on the screen. You can write on your. Let me erase those. Stella, can you please erase this? Can I do that? No. You know the green have annotation. You know the green ticks. Stella, you have to remove it. Can you please do that? Yeah. Let me enable you. You've been enabled now. Don't worry. You can try now. No worries. You can try now. I have enabled everyone to annotate now. So just erase it. Moving into the next bit. You know, there is a eraser. Or can we do that from our side? Tricky eraser. Oh, done. Thank you. Thank you very much. Well done. Thank you. Appreciate it. Okay. Moving to the next question, number 12. I think we have done 12. Number 13. Got to be faster. Yep. 13. What is the Hayes closing capital? Interesting, nice and good questions, I would say. At 1st of September 2011, dates are very important, remember. 1st of September, they said balances capital account is this in the year 31st August. So 31st August is the year end 2022. And 1st of September is the year start. Invested more money. At the beginning, do you agree this is opening capital? And this is invested more money means more capital. Owner introduced money, personal funds. It says 80,000. He took a loan, 80,000, let it be there. So profit and loss for the year, reported a profit for the year given drawings. So how do you get the closing capital? The formula, what is the formula? Opening capital plus more capital, which is called bank, plus profit for the year, less drawings. You get closing capital, don't you? Right, so put the figures in it, give me the answer. And what to do with the loan? Nothing to do. They just gave you to make you confused. You don't do anything with the capital. The loan, yeah? That goes into the balance sheet. Okay, so how do you get this? Come on, faster. Give me the answer. 31,754. Plus more introduction of capital is 40,000 more money coming in. I better do on my calculator, saving my time, isn't it? And 48,634 is the profit, and 28,500. And what do you get at the end? I'm going back to the calculator. So I'm getting some answer now. Fatima, big difference is answer. Yeah, big difference in the answer. Indeed. Why? 31,754. Don't go to my handwriting. Yeah, my handwritings are like, my mom wanted to make me a what? Doctor. Eventually I became a chartered accountant. So my handwriting is like doctors. Yeah, 48,634. These are all in, and minus is 20,540, is it? My handwriting, 500, yeah. 91,888 is the right answer, right? 91,888 is the right answer. Yeah. So this is your closing capital. That's gonna go here. Moving to the next bit. I hope everybody got that answer. Makes sense, yeah? Right? Yeah. Thank you. Thank you, Tuba. Thank you, Olin. Next one, number 14. When Frank prepared his year-end accounts, he made a calculation error to overstate it. This is recorded, so you can check it out later on. Don't worry. Overstated the value of his closing inventory. Guys, what does your closing inventory do? Tell me, into the income statement or into the balance sheet. Let's finish the balance sheet. Easy peasy, yeah? Into the balance sheet or financial position. Isn't it a current asset? Closing inventory is a current asset. It goes up, current asset goes up. It goes down, current asset goes down. So what did they say here? Overstated, yeah? Closing inventory. What is the effect? This error on the profit. I'm coming back to profit in a minute. And the asset, net asset. You overstated, or net asset goes overstated, isn't it? So this should be the one of the answers of overstated. Yeah, one of these answers. How about the profit? Now, asset is easy peasy. Yeah, closing inventory is a current asset. You make it higher, asset goes up. You make it down, asset goes down. What about the income statement? What does the closing inventory do? You see, in the cost of sales, how do you do the cost of sales? Opening inventory, don't you? Plus profit, less closing inventory. Do you hear me, people, in the Zoom? Say something affect your audio quality, closing some applications. Did I open so many applications? Fatima, do you hear me? Or Nafiu, Rahat, can you please write me?
Yeah, I'm fine. I can hear you.
Thank you very much. On my system, it says something. Okay, you see opening inventory plus purchase, my bad, not profit. Opening inventory plus purchase, less closing inventory. You get cost of sales. You get COGS, cost of goods sold. That means closing inventory makes your cost of sales down. Yeah, closing inventory makes your cost of sales down and profit higher. If it is difficult to digest, remember, higher the closing inventory, higher the profit. Did you remember it? Higher the closing inventory, higher the profit, because closing inventory makes your cost down. If your cost goes down, profit goes up, because from sales, let's assume sales is £1,000 and cost of sales is 800. You take away, you get gross profit. 200. So what does the closing inventory do? Makes your cost of sales down. If your closing inventory is higher, cost of sales down and gross profit goes up. So the simple answer here is your profit would be overstated and your net assets would be overstated. If your closing inventory overstated, profit and net assets are overstated. Easy peasy, yeah? Moving ahead with another question. John needs to adjust his draft year-end accounts to record a prepayment. Another accruals and prepayment question coming in. 1,500 and an accrual of 400. Do you agree prepayment is a current asset? Prepayment of expenses, yeah? Prepayment is a current asset. Accruals is a current liability. Even if we do set off, we still have 1,100 prepayment. Do you agree? Yeah, 1,100 current asset. Okay, what is the question? How will John's profit and net assets, two things again, profit and net assets affected? Tell me, what do you do with the prepayment into the income statement? You minus from the expense, don't you? Prepayment minus. Accruals you add. If you minus prepayment in the expense, from your expense, if you minus, what happens? Expense goes down and profit goes up, right? So profit will be up. Where is that word here? I can see in the 1, I can see in the 3. These two can be answered. Also, prepayment is a current asset. So 1,100 prepayment is there. That means assets will go up by 1,100. So what do you think is the answer here? A, B, C, D. Which one is the answer? Well done. Thank you, Rahat. Thank you, Nafiu, for writing C. C is the right answer. Thank you, Fatima. It's the right answer. Well done. Yeah. Prepayment makes your expense down, profit higher. Also, it's a current asset. Next one. One of Brian's customers returned goods valued some figure. These had been sold on credit. Okay, that's all right. Double entry. That means sales return double entry. Who remembers the sales return double entry? I'm leaving it on you. Sales return double entry. What is debit? What is credit? Or I'm giving you option A, B, C, D. That's your answer. 30 seconds. I'm getting some answer from Nafiu, from Fatima. Fatima says sales return debit. 100% agree with you. So sales return debit. There's only one option, sales return debit. They didn't give us any. So none of these are answers. Sales return debit, receivables credit. Thank you, Olin. Thank you, Rahat. You guys are right. D is the right answer. I repeat, this is sales return. Sales return is the opposite of the sales return debit, receivables credit. Yeah. SR debit, receivables, trade receivables credit. Number 17. Michael and Donald have been in a partnership. You're getting some partnership questions. Yeah. Remember, current account can come, capital account can come. Then you see, this is called current capital goodwill can come. Yeah. Let's see what is this question about. Partnership. Michael and Donald have been in a partnership for several years, sharing profits and losses in ratio 3:4. Ratio 3:4. 3 plus 4 makes 7. Agree? Yeah. Yeah. So that is needed because you need to divide it that and multiply by 3 and 7 to get the profit sharing ratio later on. 1st of January, they had the following credit balances. Credit means available balance. So in the capital account, they have positive money always will be, but current could be positive and negative both. This time positive money. Michael and Donald had some money put aside. What is the one sentence scenario there? Partnership statement profit and loss for the year shows 28,595. 28,595. Now, the partners had made drawings this much each. What is the balance of Michael's current account from the profit? At first, you need to, from the profit, you need to take out if there is any interest on capital, interest on drawings, you need to adjust those. Yeah. So, there is a drawings, straight away drawings. Drawings makes your capital and current, these things down. So can you, if I give you a little time, can you do that? At first, isn't it a good idea to get the profit sharing ratio divided by 7 times by Michael 3? Yeah, times by 3. You see why I'm doing this? Because they asked for Michael's one. So that's why I'm doing this one. 28,595 divided by 7 times by 3. 12,255. Thank you, Fatima. Now 12,255. Yeah. Partnership statement profit and loss shows the net profit, and the partners had made a drawings of this much. What is the balance of Michael's current account? Do they have any other current account? Michael has 11,480. We've got to add this with the profit. This is positive value, 6, and minus the drawings basically. Times by 11,486. Yeah. The available money Michael had 23,741 minus drawings. How much was the drawing? 16,000 was it? 6,500, isn't it? Minus 16,500. 16,500. So you get the closing. 7241. Thank you. I'm taking that answer. 7241. You understanding me? Yeah. At first we found the profit sharing. 12,255 belongs to Michael. Also 11,486. That is also belongs to Michael. From that figure, we take away the drawings, and that leaves us 7241. Acha, hold on. You can argue the drawings and interest and drawings, that both of these goes into the current account. Yeah. What are the items goes into the current account? I repeat, on my YouTube channel, you can see the partnership related videos. On the credit side, if this is a current account, look at this, current account. You see Michael and Donald. You can have a balance BD, and then profit, yeah? Then interest on capital is partner's gain. Would you remember? Interest on capital is partner's gain. What are the other two items, most popular two items? One is drawings, one is interest on drawings, goes on the debit side. Would you remember, please? Yeah, this is recorded video, you can check it out. And you do apply the formula, you will get balance CTBT for both. Yeah, because this is a revision class, I'm going a little faster. Okay, 18. At 1st of October 2011 or 2021, Bakari's bank overdraft given during the year and is 2022. He issued checks, total value this much. Is total lodgement. Sounds like bank reconciliation. Lodgement means money in. Yeah, this is already a minus figure. Then another minus. This is plus. And bank charges is a minus. What is the question, to be honest? What is the Bakari's bank balance brought forward? This is not any bank reconciliation or straight difficult question. It's a straightway question asking you about the bank balance. You started with the minus, which is 3,270. Then you have minus more, you given some money. So money goes down from the bank, 642. Plus you get some lodgements, you're getting some money into your bank, 191,729. And there's a charges, 827 minus 827. Give me the figure. Of use is A. Let me see more. It's 2010. Rahat says 20. That means A minus 2010. That means credit. Minus means it's a credit. Yeah. You had at the beginning. Thank you, Fatima. Thank you, Rahat. Thank you, Nafyu. It's a minus you started, then given some check, received some check, the bit of bank charges. You're just doing your cash book. You could have done this in this T manner. Yeah, BD on the credit side, like this 3,270. Then more check issued 18. Like this is here, and this is there, and this is here. Then you can have your balance CTBT. So you can do any T account format. You can do straight away on your calculator. Choice is yours, no matter. As long as your concept is clear, you can do it well. Another question, 19. I'd like to read the scenario here. What is the correct value of the creditors to be reported on the team's statement of financial position? Basically, trade payables or PLCA related question would be. So let me see this question. A dodgy question, I would say. 31st October, balance on the payables control account. Team's general ledger. What do you mean by control account? You know the total of all. It says 79,850. Okay, good. Then the total of the list of balances. Guys, remember these words. List of balances means individual account. I have said at the beginning of my lesson somewhere. We found this stuff. On the it says value is down, little down. It was 850, it was 310. Yeah. So team has discovered the difference is because of a payment of 60 was entered correctly into the day book, but recorded 600 on the supplier's account. To be honest, nothing to do further calculation for this question. The answer would be 79850 or 79,850 because that is the correct figure, because they have done some mistakes, 60 and 600. I would like to show you how to correct this mistake. The answer here is 79,850 is the right payables figure which you transfer to the balance sheet. But what is the mistake they have done? Read it again at the bottom sentences. This sentence, basically. This is because the payment of 60 was entered correctly in the day book, but was recorded 600 in the supplier's account. Let's open a supplier account. Payables ledger control account. Yeah, or just payables ledger account. It is a credit account, isn't it? You meant to write 60 here. Instead of 60, you have written 600. So you one quick correction. Yeah, when you pay to your payable, your bank becomes credit, payables debit. Yeah, two popular item goes on the credit side of your payables. Guys, knock knock. Yeah, hold on. Have a look here. Trade payables. Let's assume any balance BD. Two popular item. Balance BD goes on the credit side. Credit purchase goes on the credit side, isn't it? What are the items that goes on the debit side? Bank, purchase return, contra, set off, or contra is the same thing. Discount received, isn't it? Right. Now this payment for 60, it was meant to be 60, but you have done 600. That means you have made it down too much by the figure, which is the basically difference between these two. Yeah. But that was not the question. Even all this scenario I showed you is not the question. Question is how much you should show into the balance sheet. You should show the correct figure, and the correct figure is 79,850. Yeah, these are some challenges you can see, but you have to learn through T accounts. You have to practice conceptually either way. Number 20, which two of the following errors will be revealed by extracting a trial balance? Remember, COPCOR will never be revealed. COPCOR. If you ask me, sorry, Ilias, what is COPCOR? Watch my YouTube channel video, commission, omission principle, compensating originality, reversal of entry. These will not be revealed. So which one would be revealed then? Single entry, right? And transposition. Transposition means altering the, it is not reverse original entry, like one side 60, another side 600 you have put it. That is called transposition. Yeah, kind of single entry. So these are the two answers. 21. Which one of the following is the reason for producing a trial balance? A, B, C, D. What do you think is the answer? To check if certain errors have been made when recording transactions, sounds like is the answer. Basically, trial balance is the tool and technique to check the arithmetical accuracy, to check the correction of errors. Arithmetical accuracy. Are you arithmetically correct? Your T accounts are correct or not? This is a good one to go, but I'd like to read the other one. To confirm the balance of the ledger account, not like that. We don't confirm the balance, especially the ledger account. To ensure that all transactions have been recorded. No, this is not the job of trial balance either. To check the depreciation has been, not at all. So first one is the right answer. Thank you everybody for participating. Ooh, to confirm the balance on the each ledger, no, has been calculated correctly. Balance, that is doing balance CDBD. A is the right answer. Arithmetically correct, arithmetical errors. Yeah. 22, we found an inventory question. This type of question you can do a long way, like the date, the details, then inventory, then money, then money coming in, item coming in, coming out, and balance. It takes a long time. You don't have enough time. We can do on calculator, boom, like this. Let me show you. What is the question? What is the value of Wasan's inventory, closing inventory value. You need to find how many items are there and what is the value of it. You multiply. What do they follow? They follow weighted average. Periodic weighted average, not FIFO, not LIFO. LIFO is not in the syllabus these days. FIFO method or LIFO method, no. Average. So average shortcut, learn from me. Get all the inventories in, find how many inventories are there, and the value divided by that much. So listen, how do you do? Look at this. 250 we had at the beginning, and the value each is 155. So 250 I will take, plus purchases 140. 140 I bought it, and then 110 I bought it. Yeah. 250, 500. Yeah, 500 items. What are the values of the items? 250 times by 155. Can you guys do that? 250 times by 155. Let's get that quick answer. 250 times by 250 times by 155. Oh, hold on. Did I do 250 times by 155? 38,750. Yeah, 38,750. Then 140 times by 158. Do that. Thank you, Fatima. 22120, yeah? 22120. And 1110 times by 160. 110 times by 160. 17,600. Thank you, Hema. 17,600. I'd like to add all these three now. Yeah, 17,600 plus 22120, 22120 plus 38750. It's a little long, yeah. 78,470, right? Oh, thank you, Fatima. 78,470. 78,470. Oh my gosh. Get an average price divided by 500. Divided by 500. 156.94, yeah? 56.94. I'm writing it down, 156.94. Now, you need to find out how many items you have now. What did we start with? Again, a calculator going to be faster and quicker. We started with 250, isn't it? Like 250, then sold 175, we agree? There, altogether we have 500, and these are our sales. 3 items are our sales. From 500 straight away, I'm gonna take 175. Does it make sense, people, or is it a little challenging you are finding? Okay, hold on. 500 minus 175 minus 130 minus 105. 90 items left over. Do you agree with me? Like from 500, if you take away these 3 items, yeah, 90 items left. 90 items left at the rate of 156.94. If it is too challenging, you can do baby steps, and baby steps are like this. Like I had 250 at the beginning, then minus 175, then plus 140, then minus 130, then plus 110, minus 105. This is still 90. So 90 times 156. What is the answer? Nephew says A. What do your other people say? 14,125. Is it? Come on, give me an answer. Rahat says A, so I'll take that as an answer. When you multiply that, Hema says A as well, 14,125. Brilliant. Brilliant. Thank you, Fatima. Thank you, Stella. Well done. That was the little bigger question. If we would have done in a bigger format, it would have taken more time. But this is time savings. Get how many items are there divided by the cost price. You get average cost. So that is called weighted average, WACC. And multiply how many items left over. Another quick question, number 23. Margaret compared her bank statement with a bank account in her general ledger. What do you mean by general ledger again? T account. You know, we accountant maintains a cash book, yeah, bank account. in the cash book, and bank maintains one, and found they did not agree. Like bank statement didn't agree with the cash book, and that is normal because of so many reasons could be there. Like some bank items are there, like interest charge, bank charges, overdraft, standing order, direct debit. We don't know yet unless we get the bank statement. So we can't, we didn't write in our cash book. Yeah, that is called bank updating. And there are some outstanding lodgement and unpresented check, which we have given check or received check, but not shown on the bank. So these are the two reasons. Again, guys, watch my videos on this regarding bank reconciliation statements. Also further videos are given on some of my courses, accountinglecture.podia.com. That's going to be helpful, definitely. Now, she found two possible causes for the difference. Yep. Do this reason for the difference require an entry into the bank account in the ledger? What do you mean by bank account in the ledger? You need to understand the question. That means in your cash book, do you have to update it? In your cash book, you can update only standing order, direct debit, bank interest charge, bank charges. Yep. Those are into the bank statement, not in yours. So some checks have not been lodged by the supplier. That's none of your concern. You have given the check or received the check, not shown in the bank statement. So this is not going to be your answer. Yep. Does not require an entry. Bank debited fees on her account. Yeah, that's what you need to update on your cash book. This is the answer. Updating the cash book. I have a thorough videos on bank reconciliation statement when I didn't have beard. Let me see, those videos are still available on the, of course they should be available. Bank reconciliation videos, not the latest one, very old one videos are there. Yeah, look at this. Can you see me here? Young, energetic, no beard. Okay, that was me back not 4 months ago. That was maybe 6 years ago video. Bank reconciliation statement. Hope it helps to many of the students. Going to the next question 24. Alex and Jose, so many people says. Okay, I think it's time to give you a break, isn't it? What do you think? It's time to give you a break. It's 11 a.m. See you at 11:10. 11 past 10. And right after that, the next session is going to be our last session. Still 25 questions are there, but we'll try to finish at least 10, 15 questions. So I think it's good to take a break. It's been, this session was a little heavy, wasn't it? Yeah. What's the name of your YouTube channel? Accounting lecture. I'll send you the links. Yeah. Just write down accounting lecture. It looks like this. Welcome, Fatima. Okay, guys, then see you in 10 minutes time. Bye for now.